Welcome to the Bay Insider with Amanda and Ying, where we talk about real estate, history, and lifestyle in the San Francisco Bay Area. Welcome to our April and May, beginning of May, right?
Very beginning of May. May 9th is today's date.
Yeah, and I can't remember the date of the last one that we did.
End of March.
Okay.
Towards the end of March. We probably recorded mid-March and released end of March.
That's right. Okay, so this, we got a little bit bigger time frame. There's definitely been a lot of activity that's happened in the market since we last spoke.
Yeah, apologies. We both have been preoccupied with life. Let's just keep it short. You find out more later, but that's basically, that's why we're a bit late. But we are ready to tell you
what's going on.
What's going on.
What's going on in the world of real estate. And I think, when we left you last, we were talking about how hot and crazy the market was.
Right? Crazy.
Mentioned a bunch of different neighborhoods that, I would say it still stands, right? For what, in terms of the neighborhoods that are really in demand and what's going on there.
Yeah, I mean, the reality is inventory is still way, way down, year over year. So, we are looking at somewhere between 30 or 40% reduction year over year.
Yeah, I was looking when I was pulling the numbers for my Glen Park article.
Yeah.
And I do, San Francisco wide kind of at a high level there.
Right.
And Glen Park was a lot worse for single family homes or listings than the rest of the city as a whole, which kind of makes sense because it's such a smaller area and high demand.
Couple listings,
But looking at all new listings coming to the market, because I thought that was kind of interesting to see the new listings, it was down 4%.
For Glen Park. For city?
Yeah, for the city. It was down only 4% for new listings coming to the market.
Oh, I was looking at active listings. That's a difference. Active listing, it means all the listings on the market. What she's talking about is new listing, which means we have inventory coming about the same pace as last year.
Yeah, a little bit less, but the actual active inventory is way down, which means absorption rate.
It's anywhere between 33 and 40%, depending on how you look at it. So ballpark, that feels about right. The buyers are still out.
Yeah.
And we just don't have a whole lot of inventory, which leads to a lot of multiple bids,
Yeah, well, and just talking about the new listings, like I was saying, for Glen Park, the new listings coming up, doing a 3-month rolling, was down almost 40%.
Exactly.
Just even new listings coming to the market.
That's what I feel, 30 to 40%. And it has been going on for the last 4 or 5 months now, since the beginning of the year.
Yeah.
Has not changed. And we don't think it's going to change anytime soon.
Yeah, I mean, there's a lot of talk about the IPOs, that are going to come with the AI companies and a lot of that. I think we talked about this last time as well. But that, some of those people are already taking advantage of the money that they have through RSUs or other types of methods of getting access to that cash. But there will be an influx of more cash.
Yes,
that's coming into the market.
I mean, there is right now.
Yeah, how that will affect things, how that will affect. I mean, I know rents are crazy right now.
Right.
I have a client who's renting, who's definitely looking to move into buying because the situation. Yeah.
Yeah, I mean that changes people's calculation as well, right? Once the rent goes up, it makes sense to buy. A lot of times it's small condos. The 1-bedroom condos that have been sitting for a while. One thing changed this month when we look at is condos. Condo days on market is down to 14 days. That compared to
San Francisco wide.
Yeah, that compared to what we're looking at earlier, 50 or 30 would have been the average, but have been 90 days, 59, right? So that's a huge improvement. Even prices up for condos as well.
Yeah, for sure.
Quite a bit. It's 20% year over year in condo pricing. So that's close to actually higher than the previous peak of May 2022.
Yeah.
Then, after that, because we had an interest rate hike, our market tanked in
Yeah, so that's another
2023.
thing. The interest rates actually are up
Right,
right now.
but people got used to it. They no longer care.
Yeah,
Right?
they're up, but they're not as high as they were at one point.
Yeah. So, year over year, single family home is up 11.6%. So it's
Yeah.
a very healthy return.
Yeah, and what we were just looking, we were having a kind of anecdotal conversation about Noe Valley
Oh,
in
yeah.
general, because the
Yeah.
prices have just been crazy there. We talked about some of the listings that we had looked at and put offers on last
Yeah.
time. But there's a listing in our office on 23rd Street. I'll try
Yeah.
to put the address on the screen because I can't remember it right now. But that is a Shamronander in our office. So that was listed just under 1.3 million. Obviously lower than expectation, but this was just over 1,100 square foot single family home. Fixer, needed a lot of work. And very small, right? By the time this is released, it will have closed at 2.5 million. So
Right. So
that's one anecdote.
yeah, so I've been tracking Noe pretty closely. The median price right now is 4.1 million, and that's 48% hike year over year. Now, I don't know if price actually went up that
I
high,
think
but
more also because we're looking at median, I bet the average is actually less because what's happening, I believe, is that there are more high-end houses that are selling
absolutely. That's
than usual.
exactly what's happening in Noe. Generally, you find a lot of lower end homes, I guess lower end of for Noe,
Yeah.
relatively speaking, the fewer, like over 4 million, 5 million. But recently, there have been a lot of $5, $6, $7 million sales in Noe. So that number is not exactly, precise.
So what is you're looking at the numbers there. Can you tell me what the median price per square foot in Noe Valley?
1774.
But how much did it go up in that
up?
same time that the
Okay.
sales price went up 40-something%? Yeah.
So for the same price, we said the median sales price for a single family home is 4.1. That's about 48% year over year.
Okay.
Now price per square foot is 1774, is 26% over year.
26%. So that's still a lot.
That's a lot, but that feels more realistic.
Right. It's not as crazy as 40-something%.
Right. That was just a mixed issue.
And what did you repeat the price per square foot that you just said, the actual dollar number?
1,774. Yeah, I mean, it's pretty high. And those are generally larger homes. Yeah. Just keep that in mind.
Right.
And
whereas we usually see the higher, historically, the higher numbers on the small.
I mean, I think 1,500 was a high number for Noe for us to use for a long time. No, 774. And it's easily over 2,000 for some listings.
And that's median, yeah.
Yeah. Another thing I want to mention recently, very interesting in Noe, is some agents have been doing coming soon listings, meaning they will put a property on the market on Thursday as coming soon. They start showing Friday, and they expect offer by Saturday. Never officially go on the market. I think the intention behind that is to drive traffic or drive buyers who are, just don't want to miss out.
Are tired of losing.
Tired
of competing.
Just want a house in Noe with a fewer competition. That is true because you only need a couple good offers. Mm-hmm. So I see that happening a lot in Noe Valley recently as well.
And I think, and we've seen a lot of preemptive offers going on and those then being accepted, which
correct.
A lot of times in a hot market, that's not always the best route to go. But I do think that because there's some uncertainty as to how long this craziness is going to last, that sellers are perhaps a little bit more open to capturing those very high preemptive offers.
They want to ride the wave. They want to take advantage of the super hot market. You can't blame them for that. That's legit. But I do think buyers are getting really tired. That's my feeling, right? Like most people be like, oh gosh, I am so exhausted. I don't want to do this anymore. How many more times do we want to lose?
Yeah, it's emotionally, it's
Exhausting.
a lot of time, it's
Yeah,
a lot of emotion,
yeah,
so you have to be prepared for that if
yeah.
you jump.
What I tell my clients actually is, if you can just wait out a little bit, it probably will get a little better. And we do see more opportunities recently, don't you think? A little more than last a few months.
Yeah, I mean, some, it really is, and I don't know that it'll ever change,
Mhm.
that places, as we keep saying, that check all the boxes,
Yeah.
that are in the prime neighborhood, that right location, good layout, updated. There's always going to be competition for those. I just don't see a world in San Francisco where there's not.
Yeah, no, that's true. Yeah. But I do see, for a while, it's almost impossible unless you have unlimited budget.
Hmm.
Right now, I think it's possible. There are a few opportunities here and there if you just, keep at it. Right?
Yeah, so definitely, and that's citywide. I mean, I just got a client into a property in the Excelsior on
Mhm.
Nay Street, which is right off of, like, right across the 280 from
Okay.
Bernal Heights,
I see.
right? So it's
Yeah.
actually very central in the city, and they had been looking in South San Francisco and San Bruno and
It's about the
different
same price
areas
point.
where the prices. So this was listed, I think it was listed at a million. I don't know. We closed at 1.2, but it's a single family. It's updated. It has an extra long lot with a
Mhm.
nice yard, 2 bedrooms, 1 bath, but it, in a big, huge garage
Yeah.
and storage area. So I thought that was a big win because you're still in the city. You've got a single family home.
Yeah.
You've got a foothold in the city.
Yeah.
So that seemed like a really great.
I mean, there are definitely opportunities if you just keep on looking. I want to just talk about a couple neighborhoods. We talk about Noe, right?
Mhm.
Another one got a lot of attention lately is Pack Heights
Mhm.
mansions, right? All the mansions are in high demand. So I look at the numbers.
Mhm.
In April, 18 properties sold in Pacific
That's
Heights.
quite a bit, right?
Right. It's
Yeah.
100% year over year.
100% over the, so okay.
Previous April.
So
So
9.
yeah,
So
so
okay.
basically,
Double.
yeah, a median price is 8 million.
Okay.
Then 12 days on market, and that's really
For that, yeah, that's
for
type
the
of house. That's a
right.
very short time period,
Yeah, I don't know if I mentioned median
historically
price is eight
speaking.
million dollars. So generally, in that market, in that segment, properties are sold below asking. They sit on the market for a while. But this year we saw bids. I mean, there are houses, and we'll put some examples in there. There were multiple bids on those mansions
Mhm.
as well, millions over asking. One of them doubled. I will find the price.
And
Yeah.
yeah, and some that had been on the market sitting
Uh-huh.
at a different
Oh,
time period
they're
that
being
then got
absorbed.
into contract. Yeah.
Right. I'm sure there are a lot of private
Mhm.
sales too. Another neighborhood, Inner Sunset, has been hot.
Mhm.
Um, s-
More listed in the 2 million, selling in the 4 million.
right, right. But the median price is only 2.4. So it's
Yeah.
still quite affordable compared to Noe.
Yeah.
And average median price per square foot is 1389. So
Much more reasonable than
much
what
more
is
reasonable
happening.
than Noe. Bernal.
Yeah.
Okay. Bernal, the median days on market is still 12 days.
Mhm.
The price actually pretty much flat. The median price is flat.
Well, I noticed Bernal was really, really hot, say 6 months ago, something like that.
Oh, 4 months ago.
4 months
Yeah,
ago,
I think it was, right?
and it cooled off.
That's exactly what I'm
It
saying right
cooled
now.
off.
It cooled off. It seems to be cooling rather
It was like
than
there was like, I don't know, there was just a group of people or a group
looking
that
at
was
Bernal.
going in Bernal, really like focused in Bernal, and I feel like they all
Moved away.
went towards the sunset.
Oh, okay.
They went
Well,
towards
yeah.
what I've been hearing from people lately is Inner Sunset, Coal Valley,
Yeah.
but most importantly, what I've been hearing is I want to be within 3 or 4 blocks from Golden Gate Park.
Oh, that
Like
makes perfectly
I just
sense.
keep hearing it over and over again. And I was going for a bike ride through the park the
Okay.
other day, and I mean, it is a fantastic park. I mean, they just got some awards for one of the best parks
Oh,
in
I'm
the
there all the time. So
country.
yes, I can totally tell you
And
everything
they
about the park.
Right, and there's
Yeah.
been a lot of updates and upgrades
Hmm.
and events and things that are going on, and I think that has really gotten out to the home buying world.
Where can you live so close to such a fantastic park with all the outdoor opportunities, right?
Yeah.
There are very few places in the world that you can do that at a reasonable price, relatively reasonable price.
And the other thing that I'm hearing with regard to that is it has to be 3 or 4 blocks. If it's 6 blocks, it's too far. So when you put all that together and
There's
you
just nothing.
concentrate the
Yeah.
amount of people that
Yeah.
are looking for something that is
Yeah.
3 to 4 blocks from the park,
Yeah.
just know if that's where your target area is, you're going to have some competition.
Lots of competition. And one area we're talking about is Richmond. Richmond doesn't have much inventory either.
Yeah.
Especially when you say you just want to be a few blocks away from the park. That's hard. That's going to be hard. So be a little flexible if
you can,
if you
can stand it, or have a lot of money.
Yeah, that's the other option. Just pay more.
Yeah.
Anything else? What's our interest rate now? I haven't looked closely.
6.37 is what.
So a little bit higher
Freddie
than last
Mac
time we
has
look at it. Last time we're looking at is right.
That's for 30-year fixed, and then 5.72 for 15-year fixed. And then, of course, that varies depending on relationship deals, what bank you're working with. But it all kind of falls around there, and they kind of follow each other. Yeah. So that's as of May 7th number. And then also just wanted to touch on, because as you know, I work in San Francisco County and also Marin County. And I think we may have mentioned last time that there was some creep up into Marin from kind of spillover.
Has to, right?
Yeah, within commuting distance. So a lot of the Mill Valley,
Mill Valley is always hot, though.
Yeah, but more so than usual, and ebbs and flows. But then in the flats of Fairfax and San Rafael and San Anselmo, definitely.
Oh, that goes up too now.
Noticing, yeah.
So I think that's basically it. The market is still hot, but slightly better than a couple months ago.
Yeah, and if you're willing to deal with the things that are not perfect, or you buy a multi-unit building that has a tenant in it and you're going to live there as well. I mean, those are where the opportunities are for, something that's a little bit more affordable.
And just keep in mind, San Francisco is a great long-term investment. You might pay a little more than you want today, but a few years later, it might not make any difference. You might be happy.
Yeah, just like this, I'm sure I've said it on one of our things before, my story of when I bought in 2006, which was like the worst time ever.
Yeah.
But
you look back, it was fine, right?
Yeah.
It was just fine.
Although I see now that my house that I sold in 2020 is now worth about $600,000 more than what I sold it for.
That's right.
So it continues.
No, but your house will also appreciate, I hope.
So the person who overbought when I sold it is doing just fine.
Exactly. So think in terms of long term, not short term. Yes. And that's our advice. Thank you. I think that's all.
Yeah, that's all for now. We'll see how things go.
Thanks.
All right.
Bye.